Imagine if buying Apple stock didn't just give you a number on a screen, but a physical item for every single share. You buy 10 shares, you get 10 pieces of paper. After a few months, the value doubles, and you hand those papers over to someone else for a profit. This is the reality of TCG investing. You aren't holding intangible digits. You are holding tangible assets, 10 near mint cards, that you physically possess until the market demands them. The trading card game market has evolved far beyond schoolyard swaps. It is now a booming alternative asset class where cardboard behaves like currency. With the explosion of interest in Pokemon and One Piece, collectors and investors are seeing massive returns that rival traditional portfolios. This isn't just a hobby anymore. It is a sophisticated market where savvy moves create real wealth. If you are looking to diversify, welcome to the world of cardstock traders. Recent trends in the One Piece card game illustrate this perfectly. In just the last few months, buyers have watched specific chase cards double or even triple in value. This volatility mirrors a high-growth tech stock where hype and scarcity drive prices upward aggressively. The difference is that you are the custodian of the asset. You control its condition, its storage, and the timing of its sale, making the investment feel much more personal and real than a ticker symbol on a brokerage app. This creates a dynamic very similar to day trading. In the stock market, day traders hunt for volatility to make quick profits, battling brokerage fees and market timing. In the TCG world, we call this flipping. Instead of brokerage commissions, your trade fees are platform fees on eBay or TCG Player and shipping costs. The goal remains the same. Identify undervalued assets, cards, buy them before the wider market catches on, and sell into the hype for a net profit. For those who prefer a safer, less volatile approach, booster boxes are the ETFs, exchange-traded funds, of the TCG world. When you buy a single card, you are betting on that specific character or artwork performing well, like picking a single stock. Buying a sealed booster box, however, is like buying an index fund of that entire set. You are betting on the overall strength of the expansion, diversifying your risk across hundreds of potential cards inside the box, ensuring steadier, long-term growth. One distinct advantage the TCG market has over Wall Street is its supply mechanics. Public companies can issue more shares, diluting value, but TCG sets have print runs that eventually end. TCG sealed product is inherently deflationary. Once a set is out of print, the supply of sealed boxes can only go down as people open them. You can't calculate a market cap in the traditional sense, but you can be certain that supply will shrink over time, a powerful driver for long-term value. However, cardstock traders must respect the differences, primarily the cost of doing business. Stocks don't require postage, but cards do. Let's break down the math of a flip. You buy a card for $100 plus $9 tax, $109 total. You hold it until it hits $200. You sell, but now you pay approximately 15% platform fee, $30, and shipping, $5, netting you about $165. Your actual profit is $56, not $100. Investor bros scale this. Do it 10 times for $560, or 100 times for $5,600. The margins are there, but they require calculation. Another critical risk to manage is liquidity. In the stock market, you can exit a position in seconds with the click of a button. TCGs are illiquid assets. Selling a high-end card takes time. You must list it, wait for a buyer, pack it, and ship it. During a market downturn, you cannot simply panic sell instantly. You may be stuck holding the bag until a buyer appears. Understanding this friction is what separates a novice from a pro. This is why I personally subscribe to the Warren Buffett strategy: buy low and hold forever. In TCG terms, this translates to buying sealed booster boxes at release or close to MSRP and storing them for 10 plus years. It is a boring, get-rich-slow scheme that works even if it means missing out on some of the FOMO plays. You avoid the stress of flipping and the risks of short-term volatility, letting the deflationary nature of sealed product compound your value over a decade. Whether you are flipping singles like a day trader or hoarding sealed boxes like a value investor, the TCG market offers a unique thrill that Wall Street can't match. The ability to hold your investment, enjoy the art, and participate in a vibrant community adds a layer of value beyond just dollars and cents. It is an exciting time to be in the hobby. So do your research, watch the trends, and happy trading. For guidance and finding specific undervalued picks, consider joining TC Journal, where collectors become investors at tcjplayer.com.